live and again with Smart Investing, Clem Chambers, Zach Meir, and Steffi every Thursday, 11 o'clock British summertime. So today, what we are going to talk about, remember each of us has got one topic and then we can all comment on that. So what do you have, Clem?
Topic. Interesting right now. I mean, the question is this the bottom of the equity market? Have we seen the bottom of the equity market? Or is there another big leg down?
Where's the money coming from to fuel the new up leg? Given that everybody's spending their money on the gas bill, or are those not the people who get affected by this sort of thing?
Oh, I mean, I think it's more, are the central banks going to pull liquidity out of the market? Or are they going to keep it where it is? Or are they going to start pushing it in? I mean, the people that are worried about their gas bills are not equity holders.
Right. So basically, the equity markets reverted to what it was pre-Big Bang, pre the mid-1980s, where you just have actually professionals and rich people, and it's the sport of kings rather than the sport of every guy or gal in the street.
Certainly in the UK and large parts of Europe. I mean, large parts of Europe don't even have a stock market. I mean, you've got Germany, you've got France, but I mean, Austria. I mean, Italy has a strong market. Greece. I mean, do they play the game in Greece? Do they play the game in Spain?
I lived in Spain for 6 years between 2006 and 2012. And if I told anybody I was anywhere involved in anything anywhere near the stock market, they hated me because I was seen as a capitalist, which obviously I am, and they just regard it as gambling and just stuff for toffs and other people that they don't like.
Sure.
And
so, I mean,
the culture there is totally non-entrepreneurial, and it's really anti-business. And it's so nice to see that that mentality has been imported into this country over into intervening years.
Well, I think that there's a taste for it, but every time the normal average guy goes near it, he gets his fingers burned. And people, there's an old saying about cats that jump on a hot stove. They only do it once, and they never try to jump on the stove again because they just take it for granted they're going to get themselves burned. And I think a lot of private investors, or would be, or have been private investors, they got themselves burnt. I mean, most of the SIDS, the good old, maybe you don't have viewers old enough or from this country to know who the SIDS were, but the SIDS, they all got burned in 2000. And that was their lot. I mean, that was the end of that equity culture for that generation. And, they've come
isn't it
back.
The case now? Yeah, isn't the case now that, now every SID and his mother are all saying, well, the world's gone to hell. The only good place to be now is in real estate. And in fact, now there's the potential of them completely getting overexposed on property if interest rates go up.
I think they are overexposed on property.
There's nobody young who actually remembers what a falling housing market is in this country. I mean, you're probably going to be over 40 to remember what actually seeing a negative, since Zoopla and Rightmove have been created. It's just every 3 months you look there and there's another sort of 50 grand on your house. It's just, I mean, it's amazing. It's amazing anyone in this country does anything other than buy real estate, because it's 100% guaranteed.
I don't think they do. The other good thing about real estate is if you've got a mortgage at 3% and you've got inflation at 10%, that's a 7% return on your money on the debt. So if you've got a $500,000 mortgage, you're getting 7% on through inflation. Well, that's quite a lot of money. That's precisely £35,000 profit right there.
Yeah, no, that's precisely the trade that I may be involved in from September. So, buying a house of that, or flat of that value, not a house, must be joking. But literally that, the mortgage that we've got, I think is going to be 2.3% fixed for 5 years. So the debt will be like $500,000, as you say, because I'm a poor person, and the wife's rich, and that's the trade. Mother-in-law is even richer. It's fantastic.
Why would you risk getting burnt in equities when you can buy a house? But I totally disagree. But I mean, you know,
I'm not going for that as an inflation erosion play that you're saying. I'm going for that. Actually, I can't even remember why I'm going for that now, actually. But I suppose no, I'm not going into that on the basis that I think the property market's going to go up. I'm going into it on the basis I'll have somewhere to live. I'm away from the rental market because the rental market's gone berserk in London. So it's avoiding high rents, and it's trying to get that erosion of debt thing that Clem has talked about. But I wouldn't be surprised if the value of the property went down by a quarter over those 5 years. That's the problem. I would imagine the inflation, and this is a subtle point, the inflation erosion benefit, I think, will be eroded by the property price going down. See what I'm saying?
I would just want to add, I mean, it's fine, okay, but buy real estate, fine. But I think more importantly is to have cash flow. So that's maybe what kind of equity could be more handy rather than just lock your money into some kind of capital allocation, which could be a real estate. So Clem, picking up on is the stock market bottoming is really an opportunity for people to rely on the stock exchange to make money, to to kind of carry on. Not leaving, because obviously your income shouldn't be tied out to the stock market, but having some kind of income.
Well, you know, income is quite an interesting spot because nobody's is interested in income investing, or hardly anybody is, when the market's running hot. And then the only reason the market stops running hot is that people pull money and the liquidity is pulled out by the central banks, and therefore that tops the market. And then people still aren't interested in income stocks. And in fact, all the people that have been using them to carry trades pull the money out of income stocks and they go down, which is why you've got these incredible yields out there in the UK, 6, 7, 8% on great companies. And if you were sensible, you would buy them and make the most of those yields. But it's an example of just how dysfunctional the UK market is. And it's a dangerous place to play because it's dysfunctional, and most people are attracted to stocks and shares for all the wrong reasons. Don't want to do their homework, don't want to do their research, don't want to skill up on it, and they are lambs to the slaughter, and they get slaughtered, and then they go away and they don't come back. So that is the loop that keeps the stock market in the UK, in the situation it is, where hardly anybody really is playing that.
Yeah, I mean, but isn't the, I mean, you talk about the income, and obviously it seems that the high dividends and don't seem to appeal to anyone. I'm not quite sure why. I mean, it's just like maybe they just think, oh, it's just going to be taxed at 40% on that dividend, so I can't be bothered.
I mean, it could be, why not? Why not? But I mean, there's a lot of people not paying 40% taxation.
No, but it's just for me, I think that's the tax on the dividends. It's like I'd rather not get the dividend, and I'd rather the government didn't get the dividend. It's like they get my tax on the dividend. That's how bad the tax is.
There's got to be a reason it's available, and that's probably one of them. And anybody that wants to play a slow game, you see, getting rich quick is very difficult, and it normally means you get poor even faster. But actually building up wealth over the long term is actually a completely different game, and nobody wants to play it. And quite often, by the time people get old enough where they see the benefit of it, it's the game's too long term for them, and they say, I can't wait around that long because I'm old and I need the money now, which is of course too late.
But the tax thing is a disaster. I'm seeing that with my father, who pays 40% on his pension. If he was paying 20% on his pension, for instance, he could afford to have a live-in carer rather than being hobbling around in his house on his own. And so that, for me, I think, is where tax is just really outrageous. I mean, that's the sort of thing. He's got a pension. He could live. You could be fully cared for. But because of the tax is so high, and he's paying it at the age of 90, he can't have a proper lifestyle. I think the only, on that note, though, rather than buying dividend stocks, the thing to do now is to buy stocks which are enjoying, where the companies have the pricing power to actually exploit the current situation. So energy companies, banks are always doing it anyway. They always rip you off. So rip-off companies are the places that I would invest in. It's don't get mad, get even. So whether it's United Utilities or Southern Energy or whoever, I can't remember what my provider is, even though they're paying increasing amounts of bills. But anywhere where you see a rip-off, you just buy the company that is the source of the rip-off. So that's the best. That's the best. I think Unilever said. I think there was a company this week. I don't know it was Unilever or one of the other ones, Diageo, where they actually raised their guidance because obviously, the can of Coke or whatever they've got, not the can of Coke, but whatever drink it is.
Marmite, I think. Unilever.
The cost of the Marmite goes up 50p, and they pass on £1.50. So they can just go. They can go mad. So I think that the real trade, my trade of the week, is just to go for companies that listed companies that rip you off. Just knock yourself out.
Okay, so let's hold that for the end. Now I'm going to move to my topic, but it's going to actually follow on Clem's as the market bottom. So as crypto bottom, because obviously we are seeing with the Fed coming up with 75 points, we see kind of like Bitcoin start to rise, and some people are talking, maybe we are going to go back to $40,000 Bitcoin. Ethereum is moving a little bit faster, maybe because it's pricing in the merge, maybe not. But Clem, I'm going to put that to you first. Have you already seen the motto of the crypto market or not yet?
I think you'd have to be smoking what you've got on your shirt to really imagine that Bitcoin's at the low at the moment. And it's possible, but I don't think so. I still think under 15,000, a potential low at 10 or even below than that, and it will just happen fast, and that will be the bottom. Now, actually, the closer you get to the bottom, the less sure you should be, because the more fine your focus and your abilities to predict the future have to be. And I'm quite comfortable here to say this is low, but I'm not comfortable to say it's the bottom. And I don't want to play because it's still early. Yeah, I prefer to be buying when everybody has said, oh my God, I give up, I'm going home now. And that hasn't happened yet. Yeah, and when it does happen, it will happen fast, and then I'll be very excited. And when the bottom is struck, it's going to be a very, very difficult time for anybody, because not many of the people who are the service providers will be safe. Who would want to put sizable amounts of money in any of those platforms straight after it crashes? So you've got to let the bottom season and know who's solid and who isn't. And that's one of the reasons I don't want to be in now. I don't want to be filling up an exchange wallet with Bitcoin when people like Coinbase are getting dragged over the coals by the SEC, etc., etc. So I had a huge lump of crypto stablecoin, but that's actually gone to fiat, because I went, this is too sketchy for me to have it in a stablecoin. So I pulled it out of the best stablecoin. I put it in fiat, and I'm quite happy for it to be there. Do I want to put it back into stablecoin right now? No. So we're close, but the heavyweight soprano is not on stage yet, I don't think. And until I hear the national anthem, I'm not going to be even considering to preempt.
Zach, are you trading right now? Because I remember for last time that we kind of.
I can assure you I'm fully invested, but I can't tell you where I'm fully invested, because there would be no fun in that. Yes. I actually do chart Bitcoin every day, and I do think that just to be different from Clem, well, not just for the sake of it, but I think it is actually looking a little better just after yesterday's move. So it was a decent move yesterday. It's above the 50-day moving average, which is incredible. So the 50-day average there is around 22,000. So we're above that, and we haven't been above the 50-day average since the middle of April. So that doesn't mean that we can just crash again from here, because that in a bear market, any push through the 50-day average is actually a sell point rather than a buy point. But I think that there's a chance of it going. The best case at the moment is that above 22 or 21, it could go up to the upper 20s, and just for a little rally. I mean, even on the way down, Bitcoin when in January it went down to say 30,000, it went up to 45 by the end of March. So you have these 30 to 50% retracements even within a negative flow. Then from 45 it went down to 18. So I think that we're probably overdue a little bit of a move to the upside. And I think that because you've had all that talk about, is it a Ponzi scheme? Is it going to be, this, that, all the other stuff that there's been on this latest dip? I think most people who are going to get out have got out, and therefore with an absence of sellers, that a little rally I think could be due. So that would be the view I have. I think that also if we can. If you're sort of cautious and you're thinking when's the next move and what should I do, probably the initial thing would be 25,000, which was the May low. So that could be an excuse to buy into Bitcoin then, on the basis that you don't think it'll have another dive down to 10 or 15,000, which I think there's always a risk of that. But I'd just like to differ from Clem on that. I think we've probably done enough. Remember that the peak in 2017 was around 20,000. And so we've tested that as support, and basically that has held. So that's a pretty good point. That the Ponzi scheme crying, and then the old 2017 peak of 20,000. That for me is enough to say, well, this could be the bottom. 25,000 plus could be an entry point. If you're cautious, and then you sort of get out of it, went below 20, if you could afford that. Otherwise, certainly if it broke back above 30,000, then I think we're back in business. But I just think that idea, even before all this nightmare happened, just 20,000 was a level. It was the old peak, and I think some people, savvy people, probably were buying near to 20,000 just on the basis that that was the old 2017 peak. So that's sort of charting way of looking at it. So that's what I'm thinking of Bitcoin at the moment.
It's definitely trader heaven. But I think at the moment it's investor hell. And if I can look at the chart and I can go, look, it's perfect. It's had a bear move in 2 stages, 50-50 stages. Now it's down to 20,000. Yada yada yada. It's not going to go to 10. You always hope, not hope, but you always imagine there's going to be another leg at the top and another leg at the bottom. It never comes. This is at the bottom. It's easy to say that, but I still think it's too volatile. I still think there's a big load of crazy institutions, and they're not institutions, but businesses that have got all sorts of crazy relationships with leverage that can come unglued pretty quick, and all that collateral can be called in, etc., etc. That can cause a chain reaction. You're seeing Tesla fail, and as I said a long time ago, these institutions, they cannot be trusted. They have no courage. They have no testicular fortitude. And as soon as things go against them, they bail out as faster than they bailed in. And so I still think that's a possibility to happen. And the volatility is still there, which says the market doesn't know which way it's going, is a bearish thing to me. If it really quietens down, and if you're getting $50 moves every day, then I would say it would be a bottom. But if it can go 4, 5, 6, 8% in a day, either way, you're still in no man's land as far as I'm concerned. So I would say we're in no man's land. And it's, for me, I have to look at it and know which way it's going, not go, oh, I think it's going to go up, oh, it could go down. And I'm in that zone right now. When it was up there, I knew it was coming down. Now it's down here. It's a 50-50 land. So it's not going to change this dynamic until all this volatility drains away and until nobody cares. Or it takes another leg down and everybody goes, I give up, this is all rubbish, I'm never going to come back. And that would be possible.
Okay. Well, Clem, you are the master of picking up the bottoms. So
I'm a master of picking bottoms, am I? Yes, well.
No, you are. It's all on Forbes anyway. So anybody that they want to check the Clem has a column, you can read, all
for 20 years, and things like not just one crash, but and not just one bottom, several. I mean, you know, if there's
been the bet is that I'm saying it's up from here and the worst is over, and I think Clem is saying it isn't.
You could do worse than buy now.
Let's see. It makes it more exciting.
I don't think that anybody that buys now and is looking out 5 years is going to be sad, because it's going to be $120,000, $200,000 a coin in 5-6 years. Now, a pint of beer might be £200 as well, or $200. You know, the reason it might be $1 million a coin might not be because there hasn't been runaway inflation. But I think the possibility is the next loop is going to go over 100,000, and that will be 3-4 years. So anybody buying at 20 might feel sad at 10 in a few weeks' time. But in 2 or 3 years' time, it's going to go, look, I bought 20,000. What a clever boy am I? And they would have been clever. So it's not a bad place to buy. It's just, I think it's risk not being optimal.
Okay, and that's that I completely agree on that. Zach, what is your topic for the week?
It's amazing because I'm just looking on Sky News, on Apple News, which is on Sky News. It says energy giants Shell and Centrica enjoy soaring profits as prices rise.
Which is why Centrica lost 1.2 billion, right?
Yeah, so it's just anything which basically is anything which is causing you pain on the financial front. Buy the shares in that company.
Centrica's good. I've got a pile of Centrica and I've got a pile of Shell as well.
I remember your call. I remember your call on that. It was brilliant. It was absolutely brilliant. The other one, which there's a weird one which I saw last week. I'm not saying it's a rip-off because obviously that would be rude, but this company called PhotoMe International, which I think they make money from all those sorts of passport, photo booths everywhere.
Yeah.
I mean, they make 100 million or something. I mean, it's unbelievable. I mean, it's like, what is it, 1975, where you can't get a photo anywhere else. I mean, it's unbelievable. Maybe it's a play on 500,000 people waiting for a passport. I don't know. So they just keep taking photographs of themselves in booths, hoping that one day they'll get the passport. But I mean, and they're going to pay a special dividend as well. So absolutely incredible. I mean, I just look up the company. It's fun more than anything else. It's so, like legacy technology.
I think they've got some ID technology as well. They do more high security stuff too. But yeah, I mean, it's been evergreen. I remember as a little kid, sitting in them and pulling faces.
Yeah, I mean, how much do they charge for a photograph? I mean, that's the thing.
Quid,
I mean, it's
a £5. And you get a little sheet out with 4 pictures. And of course, it's
a £5.
Yeah. If you're worried about, you don't, you can print out your own photographs, but these have the stamp of approval from the passport office or whatever, so that you don't want to go and send your own photographs and say, "Oh, my wrong size."
So that's their business model, basically. They've got that. It's a bit like Delarue with the printing the banknotes.
I was going to mention the company. There was a claim as well.
Delarue, yeah. Well, it's been up and it's been down. And I mean, I got out, unfortunately. The problem with them is that they're one of their big holders is a company called Crystal Amber. And Crystal Amber said, if 75% of people don't agree that we continue the fund in 15 years' time, we'll close it. And a hedge fund got hold of enough shares to stop them renewing their mandate, and shorted all the shares in their fund, knowing that they'll have to sell them. So, and Delarue is one of them. So there's this overhang. And because Crystal Amber is under attack by this hedge fund that shorted all its portfolio and trying to force it to sell them all and therefore crush the price, which that should be against the law, because that should be they should be held up for market manipulation, I would have thought. But no, not in the UK. Regulator has no teeth. Regulators don't care. And another reason why private investors get burned and go and never come back.
Yeah.
£8 for 5 photos. What a joke! Unbelievable. £8.
£8 is it? Oh, well, in France it's 5. This is more reasonable.
Okay, let's move into our tip section.
Tips. Well, I mean, I can only tip what I've bought recently, because I think that's the only fair thing to do. And what I actually bought recently was I topped up on the ITV, and they've actually did they come out today, or was it a few days ago? And they've got some, they're doing okay. And for me, ITV, which has got a massive back catalogue, and all those American companies have been fighting over content. seems to me to be an absolute no-brainer, and you know, it's as cheap as chips. I also bought a direct line which got smashed, and one of the things that I've been looking at is that if you come out with numbers that are any weakness in them at all, you absolutely get smashed. Yeah, and companies are getting smashed for no apparent reason. Vodafone got smashed a few days ago for no apparent reason. So I'm tending to buy companies that got smashed for no particular reason at all. So BT's get smashed today. Direct Line got smashed a few days ago. That's the sort of thing that I'm picking up. Good companies that are basically hated by the stock market, and we've got great businesses, and you really wouldn't feel that they're going to be there tomorrow. They're going to be there next year. They're going to be there 10 years time, and they got smashed. Today's ones got smashed. Smith and Nephew.
Kelem, a quick question, because Coinbase has been smashed recently. Do you have a target price for them?
I think the way to look at Coinbase is when the crypto winter is over, count to 10 weeks, 10 months, and then buy Coinbase. Yeah, because at the end of the day, they could be the Amazon of the American market in 25 years' time if they survive, which they should survive.
Can't wait that long.
Yeah, I know. There you go. You see, I can.
It's the same chart as Bitcoin.
I'll only be 45 then.
No, but it's the same chart. The Coinbase chart I'm looking at now, the Coinbase chart is almost exactly the same as Bitcoin. Might as well just, buy that.
Yeah, sure. I mean, I think that's totally the legit way of going. But if you want equities, then Coinbase will be a good one at some point in the future. And you could say, yeah, why don't you buy Bitcoin at 20,000, and in 20 years' time it might be 600,000 or $1 million or whatever a coin, and it's the same deal. So, and I wouldn't disagree with you. But remember, Amazon's up 150 times, or is it 1,050 times? Something amazing since 2002. So there's different ways of skinning a cat. I mean, I personally, it's going to be interesting to see what happens to inflation. I think it's going to be relatively elevated for some time. I mean, if some muppet breaks something, then it's going to go into a situation which we got between the 1950s and the 1980s, where things that cost £200 were costing 20 grand by the end of that period.
Okay, Zach, your tips?
No, I've done my bit. I've had my rant for the week, which is obviously the purpose of my presence here. No, I think I'm just interested in whether by next week we'll know whether this was the turning point for Bitcoin or not. I think it's literally the inflection point now. We've had a bit of strength in the markets, in the London markets. It was up to sort of 7,300 from 71 or 7,000, so that's good. But I'd just be interested to see whether the companies who are benefiting from the current environment, and if there are enough of them, could actually drag the market higher and surprise people. So that's basically my sort of finishing thought. But I've already said, think that Bitcoin 20,000, and I think we've had enough, and we've had the base in the cryptos. But obviously, as Clem says, it might take a little bit longer.
It's interesting. I think for the next couple of years, we're going to be back to a sell in May and go away situation, or sideways trading. And you want to be out in the summer when everybody's gone away. I mean, it's so quiet out in the market, it's painful. And, prices are going to drift. So actually, it's not so bad when you think about how quiet it is, that it's not really tanking entirely. But, the whole global economy has to catch up from its 2-year holiday. And, that's going to take some time. And then when that's back in order again, away we're going to go.
Yeah. Okay. Well, myself, I just want to drive people attention to still in the crypto space to Umbria Network, which is I would say just one of the few projects really has got a real use case, is building a product that people use. So, as we are in a big market and you are looking for where I should invest, which project I should look at, I think everybody should have a look at Umbria Network. Has built the fastest, cheapest, is actually the most convenient cross-chain bridge in the space. And because everybody now is talking about interoperability, you know, how you can move and basically take your assets everywhere, then bridges are going to be very valuable. And what Umbria is building is really interesting. And the next couple of months, they're going to be even more interesting. So a solid team, and actually a project that has got a product with a real use in the real world. So the token is Umbria, and you know, you can just go on CoinMarketCap and see, and you know, still is actually holding very nicely compared to many boom, bubble, bust that we have seen from many tokens in the space. So just go and check it out. Obviously, make sure you do your own research. Is everything on the website? And, you know, make sure, first of all, you understand the investment case, which is most important.
Well, I mean, I'm very much, you know, I'm a big user and a big Umbria, and I'm involved in that project. So I can't really say anything about holding a token. But as a bridge, it's blooming brilliant. And I use it pretty much every 3 or 4 days. I'm bridging between Matic and between Ethereum. You can go from Binance chain, etc. Pretty much, I think there's 6 chains. There's so many chains that you can go from Ethereum to that I forget all the blooming names. But as far, if you want to get tokens from ETH to Matic or from ETH to Binance, etc., if you particularly USDC, it's fabulous because it's way cheaper and it's way faster. I mean, you use the native bridges and it costs way more, and you sit there for an hour biting your nails hoping that you haven't lost your stuff, whereas the Umbria bridge is only a matter of a few minutes, a minute or two. So it's much faster, which I find tremendous. And basically it's near as damn it free when you're going from somewhere like Matic to ETH. So unlike what it costs you when you go through these centralized bridges, not centralized bridges, the actual other people's bridges.
But also, I mean, Clem, maybe you got in fiat, but I'm still in stablecoin, and I'm actually making some good interest in the bridge, because a part of moving the assets, you can just park there your
well, you know, the fee. I don't know. I'm not for pushing my own projects. I'm against it, but the fees that people who provide liquidity get are relatively good, very good in comparison with what else is out there at the moment, because they're all based. The thing is, it pays in the token being bridged. Yeah. So when you actually supply liquidity to ETH or to Tether or whatever, you get paid in Tether. You don't get paid in Umbria or some other token. It pays in the token that you're supplying liquidity for. So the earnings are real. It's not diluted, it's dynamic. And it has a business model. It does a job that people need. There's hundreds of transactions every day. I mean, there was thousands when the market was running really hot. And you know, if you're minting an NFT on Matic and your money's in ETH and you want to get it across, that's the quickest, cheapest way to do so. So people use it big time. So it's got a lot of utility for those people that actually need their tokens bridged. And then it's got a business model, and that business model is open to everybody to join in on. And that's what makes it a very that's why I'm involved. This is a great project.
Yeah. Okay, let's move to the question that we have got. We have got a couple. So will crypto surge post Ethereum merge? I mean, I would say, is ETH going to surge post the merge?
I think I could be very wrong here, but I'm very negative about Ethereum going proof of stake. Very negative. If I said to you, hey, we should run democracies like they run proof of stake, you'd have a nightmare. What, $1, one vote? No, thank you. I like proof of work. Proof of stake, I think is horrible. It's proof of oligarchy, and the Ethereum people want to get back into the money flow and get rich.
That's interesting, because I always thought that Ethereum was not really, was more about, we are trying to change the world, we are trying to build something, and then they are moving towards capitalism.
Oh, whoops, we have.
Yeah.
Oh, and we're not getting all the money. Oh no, oh no, give me the money. Oh no, oh no.
Yeah, that's, I mean,
I'm suddenly not communist anymore. I'm not an anarchist.
Exactly.
I want a Lambo.
Okay, that's I think is an interesting thought.
Because I've got a Lambo. I can't.
Yeah, why I can't have
some of that code? Can I have some, please?
Yeah, well, let's see how they are going to do it. But I'm a little bit concerned as well. I mean,
well, the world is run by oligarchies. Take it, like it or not, generally speaking, run by oligarchies. Decentralization, libertarianism doesn't tend to go that way. So, if ETH goes the way of the world, which is an elite will control it and then fight amongst themselves and do all that nasty fighting amongst themselves stuff that everybody does everywhere else, it should fit right in, shouldn't it? In fact, doing it the other way, where everybody gets a fair shake of the stick and there's no gatekeepers to rip you off and there's nobody to tax you and tell you what to do and lord it over you, that utopia, well, where's that ever worked for very long? Someone's always got in the way, got in there and gone, yeah, I agree, this is the way we should do it, but by the way, I'm the boss now, stop that. That's how it always ends up, isn't it? And so for ETH to go from a utopian a utopian idea where everybody's equal and nobody has rights over anybody else, to go into an oligarchy is the way of the world. So it might just do fine, but I don't think so. I think it will wreck itself.
Okay, another question. That's for you, Zach. What about, are we going to see very big crash in the financial market? Equity maybe can drag crypto as well. So maybe perhaps after this, nice kind of like couple of months of happiness, that we are going to see a big crash that is going to be bigger than the one that COVID caused.
I think we've already had various crashes in various areas, but somehow the average of where we are is, still in a okay place. But I think that the crash would only come if, let's say the moment the housing market is probably holding everything up, keeping everything going. If that went, then we would have a crash. So
yeah, I think it's highly managed. I think it's highly managed, and there's various hidden lines in the sand in markets, for example. And as soon as it gets near there, their policies are changed, are adapted. They're curating the markets, particularly in America. And the crash stopped at the 25% line, which is defined if you're old school. And NASDAQ went down 30%. That's that's what we're going to have. We're not going to have any more than that. And that's where it stopped. So they basically turned the taps back on again, and they are nursing the patient along. So I think they will avoid a big crash in America. And the UK market never boomed, did it? So it's got nowhere to crash.
That would be horrible if it's going to go even lower. Okay, so thank you so much for today, and remember everybody to just connect 11 o'clock British Summer Time every week, and then you can ask your question, and we always going to comment and give our insight. So thank you so much, Zach and Clem, and thank you everybody.
Thank you, Steph.